Sensex has crossed the 80,000 mark for the first time. The Nifty too has hit a lifetime high of 24,292. Stocks in India's stock markets rose to record highs at the opening, led by the country's top private lender HDFC Bank, which jumped to a record high on hopes of a likely increase in its weightage in a key global index. This is the first time that the 30 stock Sensex, which is a benchmark index for India's stock markets, has crossed the all-important 80,000 mark. It's a record opening for India's stock markets, which have been on a consistent rise over the course of the last few weeks, and now today it has reached the phenomenal 80,000 marks. Sensex breaking new ground by crossing the 80K mark alongside the Nifty, the other benchmark index for India's stock markets. The bull run in India's stock markets continuing. This morning's rise driven by HDFC Bank stock, which has hit an all-time high. Shares rising. HDFC Bank jumping to record high on hopes of a likely increase in its weightage in a key global index. We have Suyash now joining us with more. Suyash, what an opening it has been for India's stock markets.
Certainly a historic day for the Indian markets, Krishna. Sensex, as you mentioned, has crossed 80,000 mark for the very first time. Nifty is at record high as well. Multiple pockets have touched lifetime high too. And just a month back on the counting day, Nifty had made a low of about 70,000 odd points. And since then, we have rallied about 10,000 points. And the buying has been consistent. Both your retail investors, domestic investors, and even foreign institutional investors are participating in this rally. We are not seeing volatility set in the system. The rise has been consistent, and the only way that the market has moved in the past month has been up. The headliners are about somewhere around 5 to 6% in just a matter of a month. And there are multiple reasons why the market are rising. As you mentioned, HDFC being one, the HDFC Bank, and in fact the banking pack on the whole. We have spoken about in the past that how the banking sector has been a laggard over the past 12-15 months. But not only the banks that are participating in this rally, it's the private banks, especially the large cohort of private banks, including HDFC Bank. But the big buzz is that HDFC Bank is likely to be included in the MSCI, Morgan Stanley MSCI index, which could lead to passive inflows of about $3.2 to $4 billion. And, the rally could perhaps continue in the next 5-6 sessions as well. And as we know, HDFC Bank has the highest weightage in both Nifty and Sensex, and that could continue to drive the markets higher, as well as Nifty Bank higher. Another reason for why the markets are rallying is probably because we have got a strong handover from the global markets as well. Wall Street is at record high too. Sensex, S&P 500 for that matter, has crossed that 5,500 threshold for the very first time. Nasdaq was up about 1% as well at record high level. So the mood for equities overall, it's very positive, it's very bullish. There is a risk on sentiment in the market, and in this sentiment, foreign institutional investors, as I mentioned earlier, have turned net buyers. Remember, they have bought in close to 26,000 crore worth of equities in Indian markets in the past month, and in June it was their highest net buying since the month of March, and previously in the last 2 months they were net sellers. So foreign institutional investors are also coming back in the market in a big way, and domestic institutional investors and retail investors continue to push markets higher. Also, there are expectations that India will witness a normal monsoon this time around, and this is having a positive impact on FMCG stocks and other pockets of the markets which are consumption driven as well. And then we can always considering the commentary that we are getting from the RBI, along with the macroeconomic data that is coming out, the rate cut is also expected to happen sooner rather than later. From the 6 members of the MPC, 2 have already spoken in favor of a rate cut. Ashima Bindra and Jayant Mehta, they have been advocating for a potential rate cut, and that could bode well for not only banks but consumption sector on the whole, and that could perhaps keep driving the markets higher from here on.
Markets could go higher up from here as well, is the word coming from Suyash. Thank you, Suyash, for joining us with that update.